Hello, and welcome to our next NAP. NAP stands for Nonprofit Auditor Points. My name is Irina Ryzhkova, and I'm your nonprofit auditor. I created the NAPs to help nonprofits to explain some accounting and auditing issues and hopefully make them fun, interesting, and help nonprofits to learn more and understand accounting and auditing concepts better. Just disclaim, this video, it's not authoritative. I'm just sharing my experience, knowledge that I have with nonprofit community. So if your nonprofit have any specific questions, issues, please contact your own auditor or you can contact me. Once again, welcome to NAP. Today I want to discuss fixed assets. And this is part one of two videos about fixed assets. Fixed assets are common asset that nonprofit have. Therefore, regardless of the size of your nonprofit and regardless whether your nonprofit has fixed assets or not, this video will be very useful because it's important to understand why fixed assets and how fixed assets should be presented on a balance sheet. So let's start. First and foremost, again, regardless of your size nonprofit, if you just one nonprofit that has one employee or 1,000 employees, you have to have fixed asset policy. I know every time when we mention policy, it sounds very grand and complicated, and a lot of time you want to think that you need to devote a lot of time and effort to create nonprofit policy specifically related to fixed assets, and sometimes it doesn't get done and put in the back. Therefore, actually, non-fixed asset policy can be very, very simple. It needs to include probably 3 main points and 1 additional. I would say simple nonprofit policy about fixed assets would have 4 parts. It needs to be stated the capitalization threshold, and we will talk about it, what means. It needs to state depreciation method that nonprofit use. It needs to state type of fixed assets and their useful life. And the last part, it's inventory of fixed assets process. So 4 parts, very simple, very easy, and each part can have literally 2 sentences. And I will break down what it means and what fixed asset policy might have under each part. So before we do that, I would say that fixed asset creation of the fixed asset policy, it's a collaboration, probably of bookkeeper and accountant and executive. Very often it's executive director, and then it needs to be approved and put into service or in operations by the board. So management and bookkeeper need to get together, create this policy. It can literally take a couple hours, and the board can sign off and approve it on the next meeting. So for any nonprofit, fixed asset policy can be in service in about a month. So let's talk about these points that needs to be included in a fixed asset policy. Number 1, capitalization threshold. What does it mean? First of all, to understand what capitalization threshold mean, let's define fixed asset. What is the fixed asset? Fixed assets is an asset that organization purchase to use in their own operating activities, but that asset is gonna provide the help in operating activity for the period longer than 12 months. Another word for fixed assets is long-lived assets, or capitalized assets, or plant property and equipment. All of these terminologies are used interchangeably and they mean the same thing. Long-lived assets or capital assets or fixed assets or plant property and equipment, those assets that are used by the organization and they are providing benefits or used for the period longer than 1 year. Example, computers, chairs, tables, any furniture, land, building, leasehold improvements, and so forth. because they are long-lived assets and because they will be providing benefits for the longer than 1 year, they cannot be expensed right away. They need to be capitalized, put on a balance sheet, and then depreciated over the period of use. However, if, for example, we buy a ruler and ruler costs $5, and I'm going to use as accountant within the organization the ruler for a period of longer than a year, is it a fixed asset? No, it is not, because most likely it's below capitalization threshold. So what it means, not every asset that organization uses inside for the operation or for admin inside the organization should be treated as a capital asset. Only if the cost is above the threshold. That's why capitalization threshold is important. Very common threshold is between $500 and $5,000. Sometimes I've seen less than 500 and more than 5,000, but very common for small nonprofit organization. That's a policy that if the fixed assets is above that threshold, then it needs to be capitalized. Each nonprofit needs to decide what capitalization threshold they are comfortable with. I would say very low capitalization threshold can lead to the fact that a lot of assets get capitalized, and then it's very difficult to maintain fixed asset schedule. But very high capitalization threshold can lead to the fact that a lot of fixed assets get expensed right away, and if the management, bookkeepers, accountants change, so there is no way of tracking existence fixed assets. So I would say decide with your board, with your management, what is appropriate capitalization threshold is. One more point about capitalization threshold. It's not threshold that applicable to invoice or one transaction. It needs to be applicable to per asset. For example, if we are installing new roof and it's a capital asset, if the organization paid one invoice $600, another invoice $600, but overall over the period, let's just say 3 months, they paid to install a roof $10,000, and it's above capitalization threshold. $10,000 is an asset. It's not per invoice, it's per an asset. So that's a capitalization threshold. So once again, the policy will include capitalization threshold. The number 2, it needs to include method that used to depreciate. And under GAAP, under general accepted accounting principle, the only appropriate method is a straight line. Therefore, it just needs to say one sentence. We're using straight line method of depreciation. What it means that we take a cost of fixed asset, like I mentioned, roof, and if we believe this roof is 20 years life, estimated useful life, or 10 years estimated useful life, then we're using straight line method. What it means that we take 10,000, divide by 10 years, it's 1,000 straight line, meaning the same amount every year will be depreciated, straight line, same amount. So that's number 2 in the policy that needs to be method. Number 3, types of fixed assets and their useful life. Useful life of fixed assets, it's accounting estimate. It's not real life of the asset. It's accounting estimate. So it needs to be reasonably estimated. And so for example, you would say organization might have the following type of the fixed assets: buildings, leasehold improvements, furniture, computers. And you would say typically land is never depreciated. This is the only asset that has no useful life. Under accounting estimation standards, land lives forever. So we don't depreciate land. Building is depreciated over 40 years. So this is, you You can come up with it's depreciated over 38 years, 39 years, or 40 years. Now, computers, they depreciate it over 3 years. Furniture between 7 and 10 years. And if you have any machinery or leasehold improvements, will be depreciated over the life of the lease or life of the asset. Whatever is smaller, that's actually standard requirement. So it needs to be written down in the policy. Again, very small table where you would outline for each type of asset and their useful life. So that number 3. And last point in a fixed asset policy needs to be that it's required that at least annually, operating folks together with the accounting department perform fixed asset observation, which will require to include in a schedule new acquired assets and removing the assets that no longer exists. They can be either lost, misplaced, disposed, sold, but the fact is they're no longer present. It's absolutely required to do that. Otherwise, maintenance of fixed assets becomes impossible to do if there are no fixed asset observation. I would recommend to do it in the last months of the fiscal or calendar year for the organization, for their year end. So therefore, this policy, again, can be written very quickly. There's plenty examples online. With the bookkeepers and management, board can review it. In the last part, once the policy approved by the board, this policy should be placed in some shared portal or cloud where everybody within the organization can access, and it needs to be shared with the bookkeepers and accounting department. And every time when the organization changes bookkeepers or bringing the new bookkeepers or adding new stuff to their management team, this policy needs to be communicated. So to make sure that everybody on the same page, everybody knows what needs to be expensed, capitalized, and how things needs to be depreciated. So that was fixed asset policy and the parts that should be included in fixed asset policy. In a video number 2, I will discuss of maintenance fixed assets depreciation schedule, or in other words, how to implement that policy in your day-to-day, week-to-week, and annually, and properly maintain your fixed assets. Thank you so much for being here with me. Hopefully you learned something, and please see the video number 2 about fixed assets maintenance. Thank you and have a wonderful day. Talk to you soon.